The US election, so where next? Hi, it's Johnny giving you Saturday's video. So we're going to be looking in advance of the coming up US election. We're going to just be looking at two markets. We're going to look at the dollar and we're going to look at the stock market. So starting off with the dollar, I've got the a monthly chart up of the dollar, so you can see we're very clearly we are in an overall upwards trend on the monthly since the lows of well, actually it's below that, actually just off the screen. So the dollar actually made its lows back down here in 2008 and has been rising ever since through the financial crisis, etc., etc. Now what I think is interesting here is when the dollar made its highs up here with peak sentiment at that point. There was all these stories and articles talking about how the dollar was going to continue, and it's a wrecking ball, and the dollar's going to continue to make new highs. And yet, fun enough, the dollar rolled away at that point. But the dollar came into, as you can see, technical support zone here. So I've got two levels here, and quite obvious here on the monthly chart. So, and it's been bouncing around over this past 18 months or so, approaching 2 years. So, but we've got a major event coming just next week. Now, do I think that the election next week is going to completely resolve this chart? No, but it may start to. Now, there's a lot of factors going on as far as the elections next week are concerned. One, obviously, who wins? Two, how long does it take to count all the votes? We may not have an outright result, first thing or early Wednesday morning. May take a little bit longer. Is the result contested? Depending on who gets in, especially if it's really close. So there's all these things that are going to create uncertainty potentially between now and the end of the year, depending on how these things go on. So markets don't like uncertainty, and that could favour the dollar, but it really does depend who, at least as a result of the election, who gets into power. So if Trump gets in, then with the policies that he's talking about doing, then they could be seen, or they certainly are seen, to be inflationary. And what we've been seeing, if I go down to the daily chart and bring US 10-year bond yields up, we can see bond yields have been rising here. It's almost like the market is expecting a Trump win here. And so because of his policies, would drive up debt levels, and therefore servicing of the debt, the interest rates on government debt would rise. Now, how would that translate across to the dollar? Well, it really should send the dollar higher. Just yesterday we had the non-farm payrolls. The dollar fell on the non-farms because they were very weak, and yet somehow or other it ended up turning all the way around. The reason that the dollar turned all the way around yesterday is because of these bond yields. It was the same for the bond market here yesterday, in that the market is starting to look towards the election. So in the first instance yesterday, with those non-farm payrolls, yields slumped, the dollar slumped on the back of weaker jobs numbers, but the market has sort of cast that aside as we went through the day, because the concerns over debt levels there in the US. So if I come back over to the dollar index, okay, so we've got Trump or Harris, essentially. Let's just go with that. A Trump administration should continue to be bullish for the dollar. So we've got levels up here, 107, but probably a bit below 107. We've got this level here, this whole price zone, just a little bit lower than 107. So let's have a look at what that roughly is. A bit over 106 in the dollar index. So about 200 pips north of where we currently are. If the dollar gets up to there, then we could well be on for a major breakout to the upside. Under a Harris administration, it's a little bit more murky. the interesting thing is that debt levels are still going to rise. Doesn't matter which party gets into power, but debt levels may be managed a little bit more, or certainly it's seen that the debt levels, they're still going to rise, but maybe not quite as much under the Democrats. So in theory, either way could be bullish for the dollar if yields keep pushing. However, from a sentiment perspective, we could actually see a bit of a retracement on the dollar and yields if the Democrats get in. So then we'll be looking back down towards all these lows down here. So over, and I'm not talking about immediately, I'm talking about over the months ahead. So I say it's clear. It's clear and it isn't, because whichever party gets, I think if Trump gets in, he'll probably get a clean sweep. So he'll get both the House and the Senate, which basically gives him a license to enact all of these policies that he wants to do. I think if the Democrats get in, they probably won't, and so they won't get to do everything that they want to do, which will make the waters a bit more murky and muddy. So right now, with uncertainty, that's benefiting the dollar on the back of those rising yields. But don't be surprised if the Democrats get in, that the dollar starts to fall. But even if it starts to fall, it's got a bit of work to do to get back down to all of these levels down here. Likewise, it has if Trump gets in. But if Trump gets in, we could have a fairly swift rise in the dollar there. So do look out there. And then, of course, we can then look at the overall big picture here and say, well, it's come down and it's bounced around and it's going up. The one last thing before I move over to the stock market is that the dollar is in this lovely channel. And yes, it's come down to support zone and it's tested through here. But it's done lots of tests here, all of the roughly of the same level. And when we get multiple tests of a level, at some point, usually the market is going to come back down for that level. It's what I call pebble on the pond. If you skim a pebble across the top of the pond, it bounces the first few times, and then at some point the inertia fails as the speed of the pebble bouncing across the top of the pond diminishes and the pebble falls through the pond. So watch out for that as well. But that's more likely to happen under a Democrat win. Okay, the stock market. So let's go over to the S&P here. Now, one thing, when we look at the monthly chart, we know the S&P's had a great run this year. So the S&P into its highs was up 23% or so. I'll just double check out that number actually it looks like it was 20%. Okay, 20% for the year into the highs. Last month, the month of October, was the first down month that we've seen for several months. In relative terms, there's certainly a good case to say that maybe the stock market could do with another breather after the August breather that we had. But I say breather, but it had a decent dip and then a big turnaround all in the same month. Okay, so let's get beyond where we're at. We're close to 6,000, but we haven't got there yet. Of course, we could do a pullback with all the uncertainty, especially around the election, and over the weeks after that, because we don't know how close this is going to be, like I've already said, and whether it's contested. However, overall, the data suggests that coming into the last 2 months of the year, if you look at historic election years, the probabilities stay with the stock market having both November and December being up months. So the data, the historical data, going back to, as you can see there, 1950, a lot of data only we get to the 1950. But the data suggests, certainly over that last 70 years, is that the stock market tends to rally at some point in the month of November and then December, and that we have positive months there. So that's where we are at. Now, what actually happens in 2023, maybe I'll talk about that in January, because I have other data with regards to what may well happen in 2023 based on historic information there. But for now, yes, we may pull back in the S&P in the coming weeks. So if I go back to the daily chart here, we may, obviously the S&P's already pulled back a bit this week, but don't write off history. And history suggests that the stock market could have positive months for both November and December. So that's where we're at the moment. Yes, overall, the stock markets have had a great run the last 2 years, but also 2 years in, most bull markets actually last 5 years, just so you know. So if you're looking for a bear market, you might be a bit early at the moment. And so I'm going to stick with that. Having said that, this is maybe a bit unprecedented times, especially if Trump gets in and the sort of tariffs and everything else he might want to impose. There's a lot of uncertainty around that. So, of course, any time can be different, but history suggests that the stock market, any pullbacks we continue to get over the next week or so, that the stock market will end up having a bounce into the end of the year. What happens in 2025? Now that's completely different, but that's where we are for now. There you go. So the elections are coming up. Don't expect absolute resolution immediately after the election, but certainly there's some data there for you to consider as far as the stock markets are concerned, and some levels to consider with regards to the dollar. Have a lovely weekend. I'll see you next week.